In today's video, we're going to be going over support and resistance and how it really plays into whole numbers. So I know this is something that's very important for people that trade and people that are in the Forex market. So without people that are in the foreign exchange market. So without further ado, let's get it. Let's go. Okay, so we're going to go over whole numbers and how to use them on gold specifically, just because gold usually flows very, very well with whole numbers, and it usually likes to treat every whole number as a support and resistance. So with gold, gold usually likes to move off of every $5 level. But you can also see that she moved pretty well off of the middle point as well. I'm going to put this at 32, 33. But she usually moves off of every $5 level. So if you were to take this chart on gold and go back and basically mark up every $5 point, which I'm going to do for you just to make it a lot easier, you can see that she tends to respect every single point that she ends up going to. So over here, she respected this area, boom. And usually what gold does is she'll push into that area and she'll kind of play around it for quite some time. As you can see right here, she pushed into it, pushed off of it. And then over here, she played around a little bit and she basically formed something called a wick rejection. And then she pushed up. And then over here, she had more trouble breaking through that area, right? So your goal would be to basically look at the whole numbers and basically look towards getting in at the whole numbers, at or around the whole numbers in order to take the trade, right? So over here, as you can see, at 12:35 p.m., we had an initial move up. So your goal isn't to try to predict when the market's going to go up. Your goal would be to try to catch the retest. So maybe you could get in at 250 because you missed the initial move that happened at 12:35, right? So that would potentially be your goal. And then next, there's something called the quarters theory when it comes to gold. So gold reacts off of whole numbers, but when you think about quarters, right? Think about the psychology behind it. Like you'll never hear them, when you think about whole numbers in general, right? Think about the psychology behind it. You'll never hear them say on the news, Bitcoin hit $202.99,000. No, you're going to hear Bitcoin hit 203K today, right now, okay? When you hear it retracing, you're not going to hear, oh, Bitcoin hit $1,000, Bitcoin hit $99. You're going to hear Bitcoin drops below 99K. You will hear the psychology in it, right? The average person, when they think about whole numbers, ties it back to it being a psychological level. So whole numbers are psychological levels in the market, and it goes with the quarters theory. I believe there was a book on it, which I'm going to write on the screen, quarters. So if y'all want to go check out the book, you can. Quarters theory book. I haven't read this book for reference, but it's definitely something that I do want to read. So there is a book here with the quarters theory. So it basically goes into why the market moves with whole numbers and the quarters. So when you think of quarters on gold, right, we're currently at 33.32. So with quarters in gold, you're going to want to think 3,300, 33.25, 33.50, 33.75, 3,400. Those are known as quarter levels. And then every other level in between that is known as the whole numbers. Gold likes to move within every $5 level. So if I was to go over to the 30-minute time frame, you can see this very evidently as well, right? I'm going to mark this up as well. Like when we came to 33.15, what did price do on the 30-minute? And you can always go back and study this as well. I think it's very key so you have a better understanding of how the market moves. Okay, cool. I could have entered a position right here at 9:30. Maybe you wanted to scalp the market, right? You could have entered for a quick scalp. at 9:30, entered here and exited all the way, maybe right here. Every 5 points should be where you should be thinking, okay, cool, I should exit the market here. If I entered here, my goal is to exit potentially right here because there's a chance that the market could pull back on me. Like for example, over here, we pulled up, we pulled here, and then we pulled right back. She likes to play very, very well off of these whole numbers. And then over here, 33.10 would have been your next zone as well. And then you can also lock these on the chart. But right here, 33.10 would have been your zone to potentially enter the market. You could have done on Tuesday last week, or the Tuesday the 21st. That was Tuesday of this week, okay? So you could have entered the market here. We've tended to accumulate within this area. And what did I say earlier? Porter's theory is something that moves the markets very well. So 3,300 is basically where price went to prior. We came into this area and we wicked off of it. So that your brain basically differentiates the difference between the quarters and the whole numbers, what I would do is I would make this one really, really like bold on the chart. Or you could also label it and say, oh, quarter, there was a quarter level here. Or you could make it red so that it catches your attention. Whatever color you want it to be, right? And then the higher the time frame, the stronger the structure. But you can see how we basically bounced off of this area on Sunday night. We came back into it on Monday at 9 p.m. And then we also just recently came back into this area as well on Tuesday. So it's not a coincidence that gold did that. It basically always moves like this. So you can always catch those $5 points. You can always catch those $5 point movements on gold. And sometimes she'll even come and break below it. But as you can see right here, right, that is 32.90. It's not a coincidence that she came back to 32.90 as well. Because every $5 she tends to treat as a resistance zone in the market. So that is pretty much that for this video, but I'm basically going to walk you through 2 trades that you could have taken today. It obviously won't be today once you see this video, but 2 videos that you could have, 2 trades. We'll do 3 trades that you could have taken with this simple strategy, right? So we're looking for it to hit a whole number and then break and retest that level. So for example, today is Wednesday, right? Over here at 9:35, we came into this area. We pushed up off of it. We came back to this area as well. So if you wanted to, right, I usually tell people the easiest and simplest strategy that you can do is a simple break and retest. So what did we do? We broke this area and we came back to retest it. Gold played around in this area for a long time, 5, 10, 15. She played here for around 15 minutes. I'm not too sure if you can basically see the accumulation, but say you're the type of person that likes to hold trades. And I always tell people, hold trades with structure. That's going to be your best friend, right? Open the trade, set an alert, set it and forget it. You could have taken this trade at 10 a.m. And then gold is a bit more of something that you could intraday trade or you could scalp it. It tends to move very well for scalping and intraday trading as well. But you could have entered this position right here at 10 a.m. And then you would have been out of this position by 12:30 p.m. just with a simple break. And then we retested this area, played around for a bit, and we came back to it. The market was still bullish. So that's the trade that I would have took for the first one. And then for the second trade, you could have taken a short right here. Your stop loss would have been a bit higher, but you could also put your stop loss in between zones. So like right here, that's where my stop loss would have been. And I'd see if I could catch the move down. So here. And then this would have been a 1 to 3 risk to reward. The color is bothering me, so I am going to change the color. But this would have been a 1 to 3 risk to reward on this trade. You would have entered right here. And you're like, Venice, why would I have entered for a sell here? Okay, well, for instance, we couldn't break above 33.35. And as I said, it is a psychological level. So over here, we couldn't break. We tried to break it once. We tried to break it twice. We tried to break it 3 times. We still didn't break. We came down a tad bit lower here. And then we had a retest. So simple break and retest. That's about it. And then when we did retest this area to go lower, we ended up finally dropping. So you would have been in, this trade was a lot quicker of a drop. You would have been in this trade at 110 and you would have gotten out of this trade by 135 with a 1 to 3 risk to reward. So that's going to be it for this video. My thing for you, if you are looking to master whole numbers and how they work and why they work the way they do, would be to basically back test, go back in time, mark these zones on your chart for gold specifically, and see where she's been, how she reacts to certain price levels, and why she reacts to certain price levels. Like, why did she reject when she got to this area? And basically form a bias in your head, back test it, and see what would have happened if I did take a trade here. Cool. Sometimes, obviously, the break and retest won't work. Like, for instance, over here, we broke. Cool. We came, we pulled back. Sometimes gold will play with your feelings, but I feel like that's any pair in life, right? And then she finally gave you the move. So this would have been a trickier one, but like, for instance, over here, she gave you the move finally at 11:20 a.m. So it's just about really seeing that. But at the same time, if you had your stop loss 5 points, you wouldn't have ended up getting stopped out. You would have just been in drawdown for a bit. So it's really just about your risk tolerance. Because me personally, if I set my entry right here, boom, 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 and I know for, not to say no for a fact, because no one knows for a fact if she's actually going to go up, but I know for a fact that we have a wick rejection right here in this area. My goal is, okay, cool, let her do her thing. She's going to want to play around, fake people out. I would extend my stop loss a little bit and then see if I can catch the full move, at least a minimum of a 1 to 2 risk to reward. So this would have been a setup that I would have potentially looked for. So your goal isn't to make the strategy work all the time, but it's okay, cool. Can I at least have a 60% win rate with this strategy? If you backtest it and the answer is yes, like actually backtest it and then apply it on a demo account and the answer is yes, then definitely feel free to go ahead and go with the strategy and go with the flow of things. But that's going to be it for this video. I appreciate you watching. And if you did enjoy the video, definitely let me know what your biggest takeaway was below. And until next time, I'll see you guys in the next video.